Welcome back, everyone. Nike is set to report earnings on Thursday after the market close, and the report could be ugly, says Brian Sozzi. That's where we find his hot take today. Soz goes into the swoosh. Tell us why.
Yeah, Nike's earnings out on Thursday after the close. Of course, a bellwether company in Nike, and very much in the same breath as FedEx when they reported last week. But I think while the stock is down about 12% over the past month into this report, I still don't think the market investors understand what we might hear from Nike when they report. I think a lot of folks on the street are positioned for Nike to report something in line and reaffirm their guidance. But here are a couple reasons why none of that might be the case, and the tone might be more negative than investors think. First up, bloated retail inventories. Good note out of Jefferies this morning. Just look at how high inventories continue to be in retail. That note out today really reaffirmed to me that it's going to take a while for these retailers to work through inventory. And when we say inventory, that of course includes Nike sneakers. Also, discounting, because of those high inventory levels, discounting is intensifying to clear those inventories. So you're seeing discounts pick up at Macy's, Foot Locker, you name it, as these companies try to clear through this stuff before the holiday season. Also, ignore foreign exchange headwinds at your own risk. A company like Nike, over 60% of their business is in fact done internationally, and that is not a good place to be in when you're seeing the dollar trade near a 20-year high. To that end, China is weak too. We're starting to see some weakness, some sales weakness at retailers coming out of China. Nike is a key player in that China retail market. Fifth, volatile stock market equals more cautious shoppers this fall. I think this actually started to play out in the second quarter. That's why you saw inventories really start to back up. And then lastly, Nike could cut its guidance. They're looking for a low double-digit percentage change in revenue, excluding the impact of currency for the next 12 months or their current fiscal year. That could come down given all those factors I outlined here today. And just a good comment by Morgan Stanley's longtime retail analyst, Kimberly Greenberger. She likes the name. She likes Nike longer term, and she sees valuation as fair, but she's looking for more visibility into what the back half of the year might look like for Nike. That back half of the year may not look good when that earnings call gets conveyed in a couple days. Yeah,
it's a brand that certainly is looking to sell about 65% of its inventory at full price. And then you factor in the inventory that's going out to wholesalers as well and how much their deep discounting and promotional schedules are going to look over the course of this holiday season too. And so I think at the end of the day, it really is going to come down to not just how much, the percentage of items that they're selling at full price, but how they're working through the inventory that's out there has continued to be a headache for the entire kind of retail industry. You're looking at some of those competitors too. Not once within a retail earnings report this season or this most recent season have we not heard about inventory struggles. Connor has been absolutely going ham.
Our inventory man.
On the full screen graphic and having to update that every single time. So that is, once again, going to be in focus here.
Well, speaking of graphics, fire up the take for today ahead of these Nike earnings. And there it is. It is, wow, that's impressive work by the team right there. Don't try and dunk in the face of an angry bear. And look, if Nike comes out here, beats by a penny or two and reiterates their full year guidance, sure, the stock's going to go up. And you will have probably time to go out there and chase that name. There's no sense in trying to be a hero and getting involved with Nike. Let's hear what they have to say. Mm-hmm. Let's see what their guidance sounds like. Let's see what the tone is from CEO John Donahoe, because this would be his first recession, if we do get one. It would be his first recession leading Nike since he took over the company.
Yeah, and of course for Nike at this juncture too, I mean, it's retaining market share, but also within China, as we had discussed last week in our bull-bear debate on Nike, it's how they're going up against some of the homegrown brands that are in China, where there's clearly this shift that has been emanating a little bit in the consumer appetite to support some of those brands as well.
No way you got those Nikes on sale. Those look expensive.
They look expensive. Look, I'm just glad I got them at retail and not resale. That was the goal with these ones. So,
those are nice. Those are really nice.
Thanks.